Welcome to our 2025 investment newsletter. I'm Farouk Jaffer, and in this presentation, we will highlight the major market rebound, debunk the sell in May myth, explore resilience through drawdowns, global diversification, trade and tariff shifts, the AI edge for equities, gold and commodities, the strength of our dividends, our balanced mid-year outlook, and how Index Gurus keeps you positioned for long-term success. Stocks ended the quarter with the S&P 500 closing out its best quarter since quarter 4 2023. When we zoom in, it was a nauseating ride. Investors spent much of the quarter gauging trade tensions, growth fears, inflation worries, and world conflicts, but ultimately pulled the index up by 25% from its April low. Staying invested through downturns can be uncomfortable, but historically has rewarded patient investors. Many investors still cling to the old saying, sell in May and go away, but recent history proves that sitting out can backfire. Over the past decade, seasonal stock returns have evened out. Since 2015, the average May to October return has kept pace with winter gains, defying old patterns. Timing the market is tough. It's far more powerful to stay the course than to chase seasonal myths. Volatility shakes even the strongest hands, but the data is clear. Sharp pullbacks are often followed by powerful recoveries. The S&P 500 recovered 18.9% just weeks after April's slide. Over the last 20 years, big drawdowns delivered an average 93.6% gain 3 years later. Corrections create opportunity, but only for those who remain invested through the noise. Patience remains one of an investor's greatest advantages. The tech boom makes the US a global growth leader, but international markets still matter. US indexes now carry 33% tech weighting versus 10% abroad, giving investors a cushion when sectors rotate. Adding global exposure spreads risk, taps into undervalued regions, and buffers against home country bias. A diversified portfolio is still your best defense in a fast changing world. Trade policies are moving markets again. The U.S. tariff rate sits near 15%, the highest since the 1930s, which impacts supply chains and prices. However, recent negotiations show promise for more balanced deals. Economic laws limit extremes, but trade uncertainty can create short term noise. Understanding these shifts helps position portfolios for both resilience and new opportunities as global rules change. Artificial intelligence continues to be a bright spot for U.S. companies. Major investments in AI infrastructure and productivity tools have supported corporate earnings growth despite policy headwinds. Many experts expect AI to boost productivity for years, adding momentum to the broader market. This is one reason we remain constructive on U.S. equities for forward looking investors who want to benefit from innovation leadership. With global tensions and sticky inflation, hard assets like gold shine brighter than ever. Gold has surged nearly 65% since January 2024. Central banks and investors alike are adding gold to guard against currency volatility and geopolitical risk. While equities drive growth, commodities remind us that diversification is vital for weathering uncertain times. In shaky markets, dividend paying stocks can provide a steady cushion. Companies that steadily raise dividends have historically offered better returns with lower swings than the broader market. Many resilient businesses, from utilities to insurers, continue to grow payouts even as trade and inflation stories play out. Rebalancing toward dividend growers helps keep portfolios productive through all seasons of the market cycle. We expect United States GDP to slow modestly to around 1.5%, but the consumer remains strong, supported by solid wage growth and low debt relative to assets. The Federal Reserve is likely to hold steady or ease policy if inflation stays in check. In this environment, staying balanced, with exposure to stocks, bonds, and select alternatives, helps capture upside while managing risk. At Index Gurus, we know the true test of an investor isn't reacting to headlines, it's sticking to a plan when markets zig and zag. History rewards patience, discipline, and smart diversification. As the world shifts, our commitment is to help you stay informed, confident, and positioned for lasting success. Thank you for trusting us to guide your journey forward.